What's up, guys? It's your boy Data Stocks. Today I'm going to go over why a large portion of my portfolio, over 25%, is in Oracle stock. Alright, so Oracle. Back in January, we saw it hit $185 a share. Then, with all the tariff nonsense, it came all the way down to $120 a share. I actually remember buying it at below $120 a share. But all this came all the way up. We had these big beats right here, pushing up the stock, pushing it up, coming all the way back down right before it exploded up to 350 a share. Right back over here. And now it's all the way back to 200 a share. So why am I buying Oracle stock? Well, they have massive RPO. 455 billion remaining performance obligations. That means that they're going to have $500 billion of revenue coming in. Obviously, not all the revenue is going to be huge margins. Some of those margins are smaller, but once you get people locked in with that RPO, that's going to be a lot of revenue coming in the future. For example, you do a data center build out, not just for OpenAI, but for other partners, and boom, you got them locked into your cloud services, to your infrastructure, and that's what Oracle does. They work with all the big players. Oracle, of course, they work with Microsoft, Google, NVIDIA, AWS, and of course a big bet, OpenAI. Now, here on Gemini, Google, of course, we've seen Google kind of take away some of the market share, some of the confidence of OpenAI. People are arguing Gemini AI mode on Google is going to take away a lot of the market for OpenAI and whatnot. But here's the thing. Just like Google was cheap earlier this year, going down to 140 a share. Now it's exploded back up to over $320 a share. But now, this isn't the time to short Google. Google could keep growing, but I think it might be the time to purchase some of those stocks that are heavily involved with the, with the OpenAI kind of build out. And of course, Oracle is big with OpenAI. They're doing sovereign AI. They're doing a bunch of these build outs, not just in the US, but across the globe. Now, we've seen it go all the way from 350 down to 200 a share. So, something that's notable is their RPO being, $500 billion. That's some information that back in January, we didn't know that. We didn't know that it was going to be that big. And it was only like 10% cheaper than it is now. So I think that this $500 billion RPO is more than a 10% difference. This is a huge difference. So this stock should really not be hitting these levels here. The stock should really not be that cheap. But it is. It's cheap right now, I believe. Anyway, something incredible is that the management expects that the RPO will actually be over $500 billion soon. And OCI has a backlog that's pretty much their main product that they're experts at. They do data centers, they do cloud infrastructure, and they're growing massively. Something that they do is they obviously work with OpenAI. They obviously work with a ton of enterprise, ton of different companies use Oracle, banks, massive companies use Oracle. Another thing is that they are smaller than AWS and Azure, but they have a massive growth. They're growing way faster, despite being smaller. Now, this is a negative sentiment time, and of course, a lot of times the best time to buy can be when there's negative sentiment around a stock. For example, Google had negative sentiment with AI being disrupted. But look, I'm literally using Google AI right now. Gemini, I've been using Google AI for months and months. It's been my main one. Obviously, a lot of people use ChatGPT, but I love that Google, of course, is giving a lot of cool features. I think Google's another great one. But obviously we've seen it run up, so it's become a little bit less attractive to buy here. But it could continue to grow because it's really monetizing AI smartly, and it's got tons of built-in features like the AI that you can use in the browser, extra space in your Google Cloud, etc. Anyway, Oracle's similar to Google, but they're more for enterprises. A lot of enterprises have been using Oracle for ages, so they continue to trust their data at the Oracle in the Oracle databases. Now, another thing that's important is that there's a lot of concentration in OpenAI, but there's multi-billion contracts with 3 different customers in the last quarter alone, and so I think that we're going to continue to see that there's massive deals that are going to come out of Oracle, not just OpenAI. Another thing is that there's a lot of debt, but the thing is, sometimes companies have debt, right? And other times they like to get equity. But when you do the math, it's about 15%, 16% on the higher end of a kind of loss that they have to give up with equity. But by taking debt, they're only doing a 6.5% loss roughly. So it's much cheaper for the Oracle to take debt to secure their revenue than it is for them to give up equity. So they're actually making a smart move. If you look at scaling up the infrastructure, the data centers fill up with RPO guaranteed demand. Economics of scale should kick in, leading for margin expansion. Furthermore, strong fundamentals like a return on equity of over 69% and profit margin of 21% show the core business remains a robust profit generator, which provides a floor on the stock. So their main products are very profitable, and if it costs a ton of money to get more of their main product, which is like their subscription for their cloud services and whatnot, then so be it. They're just going to scale up and they're going to get even bigger. Now, you have to have a small conviction in AI. I personally don't believe that AI is a bubble. I think that there's a lot of room for growth and a lot of productivity that's going to come out of AI. Tons of people that are in data science, programming, tons of different jobs that are, professional jobs and whatnot. AI is helping, and AI is replacing some of the lower level jobs. And this is only going to continue to grow as AI gets better and better. And Oracle's part of AI getting better and better. Now, here's a presentation that I built with Gemini. And so here we go. So it's a 40% sell-off. It could be a clear entry point. I mean, when you look, 185 on the peaks all the way down to 120. That's a big sell-off. Right here, 250-ish down to 220. That's a sell-off. Now we're getting an even bigger sell-off, even below where we've had the price chilling at in June all the way to September. But now we're below that. So big sell-off right here. People are worried about the debt, but there's a $500 billion in RPO, and it's odds are it's going to continue to grow. Now, I think that there's an opportunity here. It's approaching the oversold relative strength index, and so the technical downside looks pretty limited from a technicals perspective. The market's valuing it based on current margins, while RPO indicates profitability is poised for dramatic growth. So once they get past this growth phase, once they're growing out their stuff, they're going to start making much more money. Just by looking at what they're going to be doing with what they're growing out, they should be making way more money. Anyway, record RPO and future visibility. Look, when a company grows massively like Oracle, people start thinking about them. People start looking at our boy Larry and they get a little scared. He owns like 40% of Oracle, as you can see. And he's not selling. If he was selling, it could be scary, because then he might say, oh, I'm going to buy Google, I'm going to buy these other companies. But no, he's already partnered with all these companies like Google, AWS, Microsoft, NVIDIA. And he knows that Oracle sits right in the middle. Oracle is like everyone's partner for when it comes to cloud and when it comes to AI. So if he's not selling, that's massive, He's continuing to own almost half of the company. Now, and remember, he's a founder, and founder-led companies like Meta, Oracle, NVIDIA, these companies typically outperform. Now, Something important to look at is, yes, there's a 300 billion OpenAI contract and contracts with Meta, XAI, NVIDIA. Massive companies are continuing to work with Oracle. And that's super important because when the best work with the best, that's how you know that it's the best. Now, there are some negative sentiments. They're worried about the high debt levels, yes, but we already touched on that. Debt is a strategic risk here. And if you're trying to go in on AI, I think Oracle could be the best bet, especially since they're leveraging and getting more capital to continue to grow out the AI future. Well, I think that it's pretty clear that I consider Oracle a strong buy. Remember, guys, this is not financial advice. Check out Oracle. Let me know what you think in the comments below, guys. And continue to do research. Let me know if you think I got anything wrong. All right. And another thing is that they're working with AMD. They're working with many different partners to grow their plans out. They've got massive deals. You buying these AMD chips. They're trying to really be extremely efficient. Obviously, AMD is one that I touched on, and how AMD is very efficient for different AI tasks, such as doing inference. All right. NVIDIA is obviously the big dog when it comes to training, but inference is something that AMD is really working on capturing more market share of. All right. Thank you, guys.